All right, team, we are back with the Ask Maddie show. Today, we are going to provide you an amazing show. You guys left some great questions asking, is Algorand really the best crypto to be buying right now? As well as some big debate apparently in the Discord that's going on right now about is buying Bitcoin at these levels or around that 74K region, 73K region that has been discussed on many previous shows within the last couple months. Is that an okay buying opportunity? Is that even a good risk to reward? We're going to get into that. Also, what's changed on Velo and talking about news. This is the Ask Maddie show. Matt, before we get into the content for today, it's imperative the team knows what's going on at Crypto Charge. Team, click the pin link down below. It'll take you to the crypto educational platform, Crypto Charge, one of a kind here. Matt, what's going on at Crypto Charge?
Yeah, at Crypto Charge, we try to give you guys that all-encompassing educational experience with the end goal of you guys becoming self-sufficient investors. Not making this super reliant environment where you guys feel like you have to subscribe in order to make actionable decisions. The goal is to make you more and more self-sufficient and for you guys to tune in for those insights. We have live shows Monday through Friday. Tuesdays is my business partner Dan Habib comes on. He breaks down all the macro stuff for you guys: inflation, PCE, CPI, Fed decisions, a whole bunch of other stuff that can be applicable to just conversations with friends and family or your stock market decisions. We have our learning center with the consistent investor strategy, teaching you guys charting strategies. We have our Discord community where you guys can get in there, ask questions, participate with other community members in non-crypto related chats as well. And that all comes at $49 a month with code YouTube and a 30-day free trial. So I'd love for you guys to come just check it out, see what you think. If it's not a good fit for you on day 29, no problem. Send us an email, get you canceled.
Yeah, I think what you're getting at Crypto Charge rather than other places and forums is you're getting honesty and we're not bought by anyone. Matt and I were just talking about, just this week with all the things that have gone on with Link 2 and other creators that are bought, some in the news getting shipped off to prison for their, third time, and these people are clearly bought. They have been honest about them being bought, yet you guys continue to return to them to be shilled about Hex, Richard Hart, or Time Wonderland. Like those are some big ones in the past couple years, or Squid Games, or their friend that's launching a crypto token, or getting into this thing or that thing, and getting to that platform and doing this. And we don't do that at Crypto Charge, and I think we've been very honest about what we are about. We do hold the cryptos we talk about, and then we give our reasons for why. We're not getting paid behind the scenes to do some BitBoy level marketing where, we give the company, the association a sheet and say, all right, send us $20,000, send it right to my Zelle so we can mention Zcash in passing. Like, that's not what we do here. So team, definitely check us out over there because you're going to get some honest analysis over there and really nowhere else. I look at YouTube nowadays and it's just like, oh, you look in their description, it's like, oh, they're being paid by someone to talk about this for 3 minutes. It's like so silly. Rather than that, let's get into some of the things for today. Maddie, are you ready?
Let's do it.
Enhanced Money says, is Algo really the best buy out of all of the others, even Solana?
Yeah, so I think that Algo definitely is one of the better buys. Let's actually go ahead and just pin those up side by side. In TradingView, guys, you have the opportunity. Now, if you're just on the basic plan, there's limited on how many that you can do here, but you can split them up in between 2, 3, 4, 5 panels. So you can actually do like a little bit of a live comparison. So we said, is it a better buy compared to others, including Solana? So let's just go ahead and add Solana as our other window here. We're obviously going to take these to a higher time frame so everything fits nice and neatly on our charts here. We have to switch both of them to the weekly. You do have the option to just have them automatically, link up to the same, but I'm sometimes looking at analysis where I don't want that. So let's go ahead and look first on the left side here at the Algorand price chart. So obviously back here in 2020, you kind of had that, fortunate timing here on Kraken. Let's just make sure that there is not a tiny bit more price history for us to look at here. Yeah, let's use this one. Let's use the crypto chart here. Even though there's a bunch of illiquidity candles, so you technically have a launch price on the Algorand of $3.20. You get this crashing structure, right? You get all the way down to minus 96%. So, guys, this is exactly what Casper did. And look, just even reaching the all-time highs there, I'd be over the moon about it. I digress. We're not talking about Casper. Let's go ahead, though, and take a look, though, at the Solana. You, again, had great, really, really fortunate timing here where in 2020, you just, basically launched right after COVID crash, right? Like, look at the date, guys, like April 6th. You're launching immediately after the market bottom. So, from there, obviously, you get a really, really big impulse. and you see a 120,000% move. Algorand, launch, here 2019 after the bull run ended. So again, guys, remember that there's like a very like gross perception people have of like, oh, it did this, it did minus this, it did minus this. Okay, but look at the launch timing, right? Now, one of the things that we can look at here is where we are structurally. So you look at Solana from current market on the right side. We bring our Fibonacci into this. We go swing high. We go swing low. We're sitting here right around the 382. We did already come out for that, almost double top retrace. And then we have our targets here of 417, 670, and then let's just call it $1,000 just to round it off. Now let's take our Fibonacci into the Algorand price chart here, and we go swing high, swing low. Well, look at that. We're well below the 236. In fact, it hasn't even been tested yet, right around 74 cents. So the equivalent of that Solana being right around $48, which is where Solana should have been back tested in the first place. So when we measure risk to reward here, and we also see there's a beautiful, healthy structure in here on Algorand. I've mentioned this a million times. You've got this higher low being established. I love to see it, and that's after you had this beautiful double bottom occur at these lower prices. This is all you want to see on long-term price action. You look at current market on Algorand, just to that 236, it's around a 280% move. If we look at some of these imbalances, you're around the 50%, around a 6.6x into the 1.618, we're looking at roughly a 23x potential opportunity to roughly that $465 mark. We look at Solana, right? And we're looking at this price that's quite elevated. We can see that we didn't do any backtesting like we've done here on Algorand, which is technically in a healthy structure. We look from current market to the 1.618, it's roughly a 220% move. So to the next actual Fibonacci extension target, Solana has a lesser value of risk to reward than Algorand does to its just 236 retracement level. We take Solana and let's say we reach $1,000. We get a 7.7x out of this opportunity. So again, some of you guys are like, I'd love a 7.7x. Fantastic. But like at what cost, right? Is it the safety and numbers aspect of it? Is that, oh, well, Solana's done well, so it's going to keep doing well? Or Matt, you're an idiot, you don't know anything. We're going to 3,200, 5,300 because, my friend says the ETFs are making a difference, or Donald Trump's going to start talking about Solana and like all these X factors that really just bring in all this unnecessary confusion. We know that there's great sound fundamentals with Algorand, just like Solana, right? There's very high TPS. There's been a lot of piloting with CBDCs with small islands, lots of testing with payrolls, and excellent risk to reward with proper structural rebalancing. So again, there's multiple layers to this to decide what the best is. You guys have to decide for you based on risk tolerance what makes sense for you. But please don't feel like you need to be part of that safety numbers thing. If all 50 of us cross the street at one time and a big box truck comes down, guess what? We're all getting hit by the box truck. So like, don't feel like if everyone is telling you to buy Solana, that Solana is the better pick.
Orlando says, how come some people in the Discord argue that buying Bitcoin at these levels around 74K is a good idea? Seems like they're disregarding everything Matt teaches.
So I wouldn't say that 74K is a bad idea. It's just not the best opportunity that's out there on the board right now. Now, if we were talking about where the best place to buy from a structural rebalancing standpoint, yeah, we've talked about 70 to 74K being kind of like that bare minimum where you could potentially pick up more Bitcoin. But at what cost, right? If we look at the Bitcoin price chart here, we'll just stick on the weekly chart here just so we have a little bit of a different view than we usually do. And we look at the swing high, swing low in here on the 2018 high through 2022 low, right? Because that's where we are cycle-wise. We reached the 1.618, which is right around 102,000. And people also just decided when we got to that 100K mark, they're like, actually, I'm not going to sell any Bitcoin here, right? And I'm not saying that we've had like an enormous depreciation, but we pulled back 30%. And people decided that their targets at 102 were not so feasible anymore. I'd rather wait for 155. I'd rather wait for 200 to take my first sell. And again, that's always going to change the perception of where we are based on sentiment and everything, right? And you guys can see that these are weekly candles. It's been, let's see, from the last actual top that we made here, it's been 70 days since we made that top, which is a little over 2 months of correction, which I really, again, think is very healthy after you get 1, 2, 3, almost 3 consecutive weeks of nonstop new all-time weekly highs, and you get this distribution structure and you pull back. The reason I've pointed to 70K, 74K as an area of interest is because it's this previous topping structure in here that didn't get fully tested. Now you're probably looking at this and you're like, Matt, that's probably good enough. Maybe it is. I don't know. But really I'd be looking close to like 68 to maybe like 73K as that area of interest. But even then, guys, let's say you get 70, let's just call it 74K, right? So let's say 73.8 and you get that 2.618. You're getting a little over a 2x out of Bitcoin. Great. Again, safety numbers, guaranteed gains. That's what people said about ETH, right? People said, oh, you got to have ETH in your portfolio, Matt, because if you don't, you're going to miss out. ETH always is going to go immediately after Bitcoin. Where's the new all-time high for ETH, right? We double topped and we were back at accumulation. I think it still looks good, but we're not there, right? So again, 74K, give or take, up into the 3.618, 180% move to a full extension. A $240,000 Bitcoin is giving you a 2.2x. It just, the math isn't mathing there for me, guys. So it's not so much that people in the Discord, I would say, are saying you're an idiot for not buying Bitcoin. There's certain people that just have different risk tolerances. They're happy with those smaller moves. They want to play that Bitcoin dominance play, and they want to add a little bit to Bitcoin. And again, everyone is perfectly fine to manage their portfolios the way that you see fit. I present the data, I present the analysis. It's up to you to make a decision that's good for you and your risk appetite.
The other says, has your stance on Velo changed? Geez, all the charts today changed since your last video a month ago.
Y'all are working these charts today, but that's fine. If you guys really like this stuff, if this is the kind of show you're after, Monday through Friday, this is what we do at Crypto Charge. It is really, really a heavy chart focused educational experience. And I think that a lot of you guys would get a lot out of it and learn a lot and be able to apply it on your own. Again, let's just keep looking at the weekly charts here. I think this is a good look for today's show. One of the things on Velo that has not changed, and this is the truth about a lot of other assets as well, is the imbalances have not been disrupted. I have not seen any changes in some of these areas that really, really should be satiated at the minimum. Now, one of the things that I've pointed to on this Velo chart is this beautiful cup and handle pattern. So you've got this big rounded bottom. You had the pullback in here, and then you've been kind of creating this like handle structure up in here. It hasn't been absolutely perfect, but when I look at this on a macro level, I would say shape-wise, structure-wise, we're still doing all the stuff I want to see. Now, one of the things I didn't like to see here was that drop below the 50-week moving average. That was a very clean break below the 50-week. You're below some of the major MAs in here, but I have seen other cryptos where prices all the way down here, you got the MAs up here just hanging out. So we're really not horribly far away from those major moving averages. What I would need to see on Velo in order to say that we're seeing something more bearish is a break below 0.0073. If we broke below that level, I'd say, okay, yeah, we're probably in for some really big turbulence here. I would say that I'm not as bullish on the structure anymore. But as long as we're maintaining this general area in here, I think that that's not deviation here, obviously, but as long as we're not breaking below that major level, I would say that we're in a good spot. Even from current market up into that 7 cent area is around a 4.8x, right? Like, and that's the part that blows my mind. Velo at 7 cents is almost 2.2x of the reward of Bitcoin is, and then to that 21 cent area, 16x, and then maybe to that 30 cent area, like a 23, 24x. So it's a very small cap right now. We're under, I think, $100 million in market cap. Still a good competitor in the finance realm. I think it's a great consideration if you guys are looking for something on the small cap side to add to your portfolio. Never chase that faster horse.
Bull's mom 8892 says, why do you need to buy the ones that have a good price? You don't even know what can happen in the news.
I mean, I guess you could just say that about anything, right? Like, why you don't know what's going to happen with your stock portfolio. You don't know what's going to happen with the Dow Jones or the S&P, right? Like, we can't, like we've mentioned many times, predict what's going to happen with Donald Trump and tariffs. We can't predict what's going to happen with other countries with their reciprocal tariffs. We can forecast and we can model and we can look at a lot of the elements that are going to happen out there in the world, in the crypto sphere. And, you can make your best analysis, and guess what? Sometimes you still get rocked. That's part of it. So the goal here is risk management, and that's really what it comes down to. Risk management does not mean that you time the market perfectly. And I think that's a huge disconnect that a lot of people have is they think, oh, risk management, you're going to tell me when to buy the bottom. No, incorrect. We decide certain levels that either are a good tolerance for dollar cost average, or we see structurally where we've been previously and we go, no, okay, this is a high likely zone to be turned into support level. If not, of course, you can see, World War III breakout or tariffs, kick up and you break below to the next support level. But the goal is not to buy into those bullish periods, to look for those key areas of interest, to set tolerance for dollar cost average, and of course, do fundamental research and make that package the thing that you focus on. And that's really the key to investing. You're never, like you said, with the news, you're never going to be able to forecast all of that. You're never going to time the bottom. So it's really more about managing risk to the absolute best of your ability. And then also manage your emotions on the other side of that when things don't go perfectly to plan. So not everyone's built for the space. Not everyone's built for individual investing. But there is a reason why we try to find that balance and do our best to create a model for ourselves and a strategy for ourselves that we know is good for the long term. If you have very, very short timeline expectations, yeah, that's going to disrupt you big time because you're like, oh, if one news event happens, I'm cooked, I'm out, I've just taken my life savings and I'm done. Yeah, we're probably doing a whole lot of things wrong, including setting our budgets, setting timeline expectations, looking at our risk appetite. Those are a lot of tough questions to ask yourself. And sometimes after you first get an investor, you go, actually, my risk appetite isn't what I thought it was. It's actually smaller than I thought it was. Or, hey, maybe I actually could have added a little bit more to the market. I could stop some of this frivolous spending that I do from eating out or going to the bar every week or whatever it is. So, sometimes you have to do a little bit of testing with that. So again, my overall biggest advice is find assets you like and believe in. dollar cost average into them when they're under zones that that you believe in, and you think that are good areas of interest. We teach you how to set those at cryptocharge.com, and then let them ride, right? Like don't expect that you're going to get rich tomorrow. If you get rich by tomorrow, great, fantastic. That's a happy surprise, but don't make that the expectation.
I love that, Maddie. We have a couple minutes here to just yap because we got through all the questions and the charting today, and it's it kind of changes you when you become of this crypto charged mindset, because when you look at these news events, you kind of really don't even care about them, because what you learn is to be able to buy in high value zones, and then you're expecting to take a majority of the profits in a bullish period when your Fibonacci extensions are getting hit. The people that more so lean upon the news are the people that are wanting more Trump rhetoric, or got hype off of the Trump election of last year, November 5th of last year, where that was like a big kickoff for crypto and risk on assets. So people are looking for events like that, Maddie. And I would have to say that we really aren't. I think even in our after hour shows, we're very passive on the current news that comes out on a week to week basis. We're not more so talking about it on what's it going to do for price this week. It's always more so in a bigger macro view of the future.
Yeah, definitely. Now, that's not to say when the markets are really hot, and we're seeing just massive impulses, on a regular basis. Of course, we'll pull out that 4 hour time frame. We'll pull out that 15-minute time frame to kind of give you guys a little bit of that education and analysis of what's happening on small time frames. But when you guys are making your macro investing decisions, a lot of you guys do get on those small time frames, or you just pull up the Coinbase app and you'll look to see what's happened for the last week or whatever, and you go, that's it, I picked the wrong coin, I'm down 15% this week. But you also just have to remember that there is a different set of volatility in this market than any other market in the world. You will never ever see this level of volatility in the stock market. Even when Tesla's having a fantastic week, or Nvidia's having a fantastic week, it's that volatility still pales so greatly in comparison. So you guys have to be prepared for that. You guys have to have something to help you manage your risk. I'd recommend you guys, have a trading journal. I know that I mentioned over and over again. I know some of you guys are slowly getting into it. It's as simple as, if you're one of those people who get stuck in a negative mindset even, and you, right there you go, beautiful. It can be as simple as a $1 composition notebook.
Come on, guys.
Really, it's so simple, it's so cheap. Even if it's got to be on your phone, fantastic. It's better to get after it than not. But a lot of people will be in a very negative mindset, and it's easy sometimes to tell yourself how bad your life is. But the reality is, if you can maybe even write down one thing that happened to you each day that's positive, and you're able to look back on that, you're like, actually, you know what? I had like 15 great things happen to me this week. It's so easy to let that one thing, overshadow. And that's true of macro news. That's true of a bad news week, true of a bad trading week. So it's important that we document and manage those emotions. One of my favorite quotes from Star Wars is, be mindful of your thoughts, Anakin, they betray you. And it is very much true, because it's very easy to have self-doubt, talk to yourself very negatively, and make money decisions based on how you're feeling. And that's absolutely nuts. So recommend the trading journal if you guys are also interested in just, an audiobook or a book that I've, held near and dear to my heart for many years, Trading in the Zone by Mark Douglas. It's just a really great book on trading psychology. I'd recommend checking out. But yeah, guys, it's not an easy game, but if you're willing to develop a plan, get through a full cycle, even if you're making some mistakes, and be willing to follow some sort of multi-step TP plan, I think pretty much anyone can be successful if you make the commitments of journaling, setting some time aside for practicing charting, and studying the technology and understanding the real opportunity here, not fear for today or tomorrow, but what does this technology look like 10 years from now.
Great point there, Maddie. And I'd also say you're able to go back into that journal and look at the strategy you are executing with, because I know a lot of people, even within this bear market into this bull run, are just like swapping strategies left and right. And when you're swapping strategies, you can't really have a good analysis to see if your approach to this bull run was successful. And what I mean by that is, constantly swapping in and out of assets, not seeing it all the way through, or, trading based off the news, or getting out because some assets have better technicals. Or when I say better technicals, I mean it in the wrong crypto charge sense. I mean it in like the price is higher, so that must mean it's going to be better. And so you got to stay away from those things. And it's a good thing to jot those down, so then you're able to go back and see about your DCA strategy, and see how you are able to buy the bottom. Or when we say buy the bottom, we usually have like a 20% off the bottom average on our cost basis. And that's a really good freaking average because
Yep.
now, like on your XRP, your H bar, I'm still up on my Zcash. I'm still up on all the assets that matter here. My API 3. Well, slightly because we took profits on those, so my coin stats confuses me sometimes. So, but anyways, we are up on those assets and we were able to buy the bottoms of those, and we can only know that we were correct in buying those, employing a good strategy, is if we're able to go back and check it. And so if you have like a coin stats, I'm able to go back and see when I was DCAing. It's not always that accurate because you're pulling in from multiple exchanges, and if you're buying on an uphold, good freaking luck getting your transactions onto your coin stats. Just forget about it, and try to do guessing games, and you just don't want to do that. And so team, there's a lot that goes into this here. If you want to learn more about it, like Maddie said, I feel like we said a lot, but it's very important that you become a Crypto Charge member because you really do need to be in a community, Matt. And it's like with everything you're doing in life, you want to be surrounded by like-minded individuals. I think that's been one of like the selling points of Crypto Charges. You're around like-minded individuals to help you grow, so that even if you know nothing, you watch our the 45-minute video, and then you get into the Discord, and then you get to rap with a bunch of people that are doing the same thing and that are in other industries, but that all come together for crypto. And this is just a beautiful thing to see. It's a beautiful learning environment, and when some people say some dumb things, and people get on them, Maddie's quick to shut it down. It's a great learning environment, and so that's what you want to be a part of, team. So check us out there. All right, we're at 21 minutes here. We're getting to the show now, Maddie. We're done yapping. All right, team, we'll see you guys next week. Bye.